Yo, what's good, guys? Here with an important video today. We're just gonna cut right to the chase. Today we're gonna look at the inverted yield curve, an update on the dollar from yesterday, and of course, a look at the technicals on SPY, because, that's what I love to do. So, yeah, let's just hop into the charts and take a look. So, interesting day, for SPY today. We're still resting on this support we've been riding for, 2-3 days now. Yeah, about 2 days so far. And yeah, it's pretty interesting. I called the bottom at 385 last week on Friday. I bought in, I took profits up here, and I was anticipating a decent pullback, and we didn't really get that, so now I'm just kind of waiting. Yeah, I've just been waiting, sitting it out, just kind of watching, and yeah, so, let's just hop into the deeper charts, and I'm just going to start off with an update on the dollar. Yesterday, you can go back and check out that video. I said the dollar will drop. There was absolutely no reason for it to keep going up. You had your bearish divergences. The MACD was going lower while the price was still going up. RSI crossed over that moving average. It was coming down from overbought. And yeah, here you go. Dollar dropped. Markets went up. Simple as that. I said that in my video. You can go back. All the proof is there. And yeah, simple as that. Dollar goes down. Markets go up. So there still seems to be more downside on the dollar. Yeah, there's decent room for this to move down still. So we'll see how that goes. We'll just keep an eye on that. And now we're going to move on to the inverted yield curve. So this is something you really want to be able to understand and be aware of, because this has very high relevance in the markets as a indicator for a recession, because every time that yield curve becomes inverted, goes under zero, a recession follows right after, or like a crash. And I'll just point that out. So here I put a rectangle around each time it went under zero, and each time I just did it for the same times on each on the markets and then on that yield curve. So where I boxed this in, that's the same time frame as this box, and it went under. This was in a topping process. You can't really call the exact dates on this. It's not a spot-on correlation, but it is a very accurate indicator based on the past on predicting a recession. You had it here. We had a big drawdown that was very fast too. This is 20% in probably a few weeks, a few months. And then you had it again, topping process right before this big that dot-com bubble in 2000. The yield curve went inverted, and we hadn't really started dropping yet, and then started going back up, and what happened here, we started crashing, and then happened again in 2008, 2007 probably. 2007, topping process, started going back up, and what do you know, we started really crashing. 2008, great financial crisis. The Fed pretty much saved the economy there, kind of had to. And then COVID, very small, but it went under, and it kept going, and then massive COVID crash. And that's not really a coincidence. I'm not sure why this stuff happens. It almost seems like the market doesn't exactly predict the future, but it predicts the outcome. It doesn't predict the events of the future, but predicts the outcomes of the futures. And I've seen that time and time again, where it just doesn't surprise me anymore. It's baffling. really makes me like question life sometimes. But now it's not really the time to talk about that. So we're just gonna stick to the charts, and yeah, here we went under again, and this is a little different because it happened at the same time we topped out, or like right after we topped out, and I'm not really sure like if the crash is over. I don't think it is, just because of all of the factors that are combined right now. With like inflation fears, and then you got like margin debt just insane right now. Fed reducing their balance sheet. You got agricultural issues all across the world right now. Just countless factors that are just lining up for a massive, massive, massive recession. This is far from a recession. Just pretty much a crash, big pullback. But something I came across that was pretty interesting was that in the dot-com bubble, the markets lost $4.4 trillion worth in value. 2008, that crash, the markets lost, I believe, 4.2 trillion. And right now, from the top to now, so far we have lost $7.6 trillion in the markets. So that I just found that really interesting. The fact that the markets have lost more in value than they did in 2008 in that dot-com crash, which, right now everyone's been comparing this to that time. And yeah, it's just something I came across that I found kind of interesting. So here, I guess we're really just looking at if, when it happens. Down here, this is when. It just gives, based on the past, the recession happened within 2 years, and I think it's lined up to do it before 2024. It's pretty scary. I think we got a couple months on our hands, but it's scary. So we're done with that. Now we're just gonna go to the charts. I want to show you the macro chart quick. And there's that trend line we bounced off of, the big one right here. So far we really rebounded off of that pretty hard. I called that bottom for 385. We went to 385.16. That was close enough for me, and that's when I called that bottom, and that's what happened. And so right now we're really just looking at if is this a temporary bottom. Is this like the actual end of the crash? Is this a bear market bounce, bear market rally? We're going to all-time highs, which honestly, I can see us going to all-time highs, new all-time highs. I know it's kind of like contradicting to what everyone's thinking, everyone's scared we're about to crash, but I think it's time to, I don't think it's time yet, and I've been stressing that for a while. I wrote this all the way down, and I'm writing it back up for however long it lasts for. So yeah, we bounced off of this. I also never really thought about this, but right here is when we broke this trend line. And once we did that, you had a massive, massive rally, and you came back down to that line to test it as support. So I know that's pretty simple. You can see it in the charts, but it never really went through my head. I was more just looking at this as a trend line, and what was resistance on a macro scale now became support. So I'm not really sure what to think of that. I don't know what you want to think of that, but it's something to keep in mind. And still, on the shorter time frames, we have not had a pullback. Right now, we may be in a rising wedge, which is bearish. You have your A, B, C, D, E, which I'll put up. You have your A, B, C, D, E, you hit that top trend line and you bounce down. And yeah, so it doesn't always have to respect it, but way more often than not it does. This trend line kind of comes back to here too. Not as clear, but it still respects it very clearly. And this bottom trend line, I'm not really sure where this is coming from. Maybe something like this, but you get the point. Yeah, you have support right around here, and it's been respecting that, but it looks like it's in a rising wedge to me, which is bearish. And also note that we're inside of this gap, right at that 410 level. That's where that gap ends, and we're almost there. I don't know if it's gonna completely get filled or not, but I'm not sure how long we can just pretty much keep going straight up for. You got two gaps underneath now. One that we created this morning, that 392 gap, and yeah, I've just been sitting out and waiting, but I'm not really sure what to think so far. We're likely to get a decent pullback. I'm not sure if we can get back to 392, but if we do, that would be very convenient so that I can really start giving those targets, because while that's there, that's really my only concern. And yeah, I don't know, as long as these gaps are here, it's hard to confidently give the level to the upside. But I can't really do my Elliott wave theory yet, just because we haven't had a pullback, and so I don't have much to work with yet. But you still have that gap at 328, gap at 329, 429, that gap at 438, and the gap at 464. I really don't think new all-time highs are out of the picture before going into a recession. I've been kind of stressing that too. Maybe we do go to all-time highs. Just kind of trap everyone. Everyone's like, the crash is over, we're not crashing anymore, bull market. And once all that sentiment starts leaning that way, we go into the recession. It's scary to think of. I personally don't want that to happen. Lives will get destroyed. But it's inevitable. Yeah, it's inevitable. So it's not if, it's when. But yeah, you got all these trend lines, rising wedge, as well as those bearish divergences on the shorter time frames. I pointed those out yesterday, and we kept going higher. Jerome Powell spoke today. Kind of mixed reactions, I guess, but those bearish divergences are still there on the short term. So maybe we get a pullback soon. I'm not sure, honestly. We can keep going, get through this gap, keep going, but I think we could be looking at resistance around this gap area. But I really can't confidently say yet. I'm just waiting for a pullback whenever we get that pullback, and then see if we make that bottom, high or low, and we see where we go from there. So yeah, I've just been kind of sitting out and waiting. No rush to trade really, but yeah, there's a lot of stocks setting up for big swings right now. We've been talking about them in the Discord. Join the Discord if you want to see those. We've been watching LabU. That's up 53% from the bottoms. Yeah, there's so many opportunities out there with swinging. So join the Discord. We got so many plays and there's so many bright minds. There's no reason to not join that Discord. So I think this is where I'm gonna stop the video. I pointed out everything I needed to. That dollar's still going down. Inverted yield, I pointed out, explained that a little. I showed you this rising wedge potential, these gaps, bearish divergences on the shorter time frames, and yeah, I'm gonna leave it there. So we'll see how tomorrow plays out. I'm not really sure what to expect when nearing resistances, but we'll see how that goes. And yeah, that's it for the video. Peace out, guys.